Welcome back to Market on Close. Let's talk some commodities, in particular, a little bit of a drop-off in crude's nonstop rally. I want to bring in Chris Gersch, who's joining us, Director of Strategy at Bell Curve Capital. Chris, we've been on this program for really 2 months now, paying just close attention to the way crude and stocks have moved so closely together, but even a little bit of like extra resilience in the commodity crude oil. So tell me what it means if it starts to break down. Not saying today is, a breakdown, but a little bit of red.
Mm-hmm. No, absolutely. We saw that correlation come back just a little bit today and towards the end of the day, but really it was driven on those, words coming out of the finance minister in Russia. The fact that we saw rig count kind of step up for the first time in 7 weeks last week by the U.S. Russia's starting to say, hey, it's not fair that the U.S. gets to kind of fill in the gap. Here we're trying to cut an OPEC. So I expect Russia to kind of break the mold, the OPEC mold, and ultimately I see them cheating a little bit and producing more than expected in the weeks to come.
I'm glad you brought up that pop from last week. I think it kind of went a little overlooked on a Friday. Baker Hughes at 1025, up from 1006 in the U.S. before, because it also happened right after Chevron is talking deal activity and all this speculation about some of the integrated giants, not just spending money, but now picking up drillers. So with all the talk about the backup in the Permian, it seems like maybe they see that getting resolved. And to me, that has interesting implications for this market.
I think it does. I think ultimately you have a lot of the oil stocks outswinging their weight here. And, those discussions, those bullish comments, Russia is taking notice, and so are the Saudis. A lot of bearish comments coming out there. And I saw, a big bearish put spread build around the 65, 66 handle in WTI. That's telling me it's kind of setting a range here from that 63 handle up to 66. So ultimately, this might be the first week in 6 weeks we actually see WTI pull back below, that rally.
Now, delve into this a little bit more for me, because I think it's kind of interesting. Obviously, crude has gained back a lot of its losses, but as opposed to, say, the stock market, where the technical analysts, I can basically look at it blindfolded now and go, all right, there's resistance at, I don't know, the high from September. Crude doesn't really have that, right? It's kind of in a little less charted territory.
It is. It's really setting up, and how it does is it's not a series of higher lows, higher highs like the S&P futures continuously do. It kind of sets itself in a nice range, 63 to 66. That's what it's doing. Remember, it's still about 23% below 2018 highs. So we have a long way to go before we kind of correlate the new highs as the S&P is getting close to.
Yeah. All right. Before we let you go, Chris, when you think about sort of the rest of this week, I mean, crude, the commodity space, we were talking at the top of our show about the potential for things like soybeans and stuff like that to move on trade news. But if we don't get anything like that, I mean, is this just a risk-on, risk-off environment? And, that's it?
It is a risk-on, risk-off. I think really the only thing that drives commodities higher, if we go back and test that 96.80 on the dollar index and it dips below that level, I think ultimately the weaker dollar leads commodities higher. Otherwise, we're waiting for headlines.
Yeah. All right. Good stuff. Chris Gersch, nice hit. Appreciate you joining us this afternoon. Looking at commodity now for crude, about 63.5. Chris Gersch is the Director of Strategy at Bell Curve Capital.